Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to We Build Great Apartment Communities. I have another great show, great guest. This is Kyle Mitchel. Very excited to introduce him and share his story, but more importantly, hear what he has to say about multifamily investing, what he's doing. I think, he has a lot to offer the community, and so very excited to have him on. I am your host, John Brackett, and we're excited for everybody to engage. Kyle, how are you, man?
I'm doing well. Thanks, Sean, for having me on. I am very excited to be here.
Sounds awesome. So talk to us a little bit. In fact, before we get on, I'm going to share your background so I can bring our audience into the conversation. Just give them a little bit, your background, but a general overview of what you're doing, what you've done, and of course, where you're going. All right. So let me talk a little bit about your background. So Kyle is a multifamily syndication professional, real estate investor. He has currently about 17 million of assets under management. He's a podcast host, public speaker, mentor, passive income producer. I like that. Cash flow creator. And of course, he is working on an asset management summit that I'm going to have him share a little bit later on in the show. And, their vision at APT Capital Group, and that's the name of his firm, is based on 4 key components. There's capital preservation, better communities, exceptional operations, and wealth generation. So their mission, of course, is to positively impact the lives of their investors and the communities in which they invest through the highest level of transparency and fiduciary responsibility. Their values are focused on the following core beliefs: first-class communication, Kaizen, and people first. So APT Group offers the chance for busy people, busy professionals to invest in real estate with experts who are aligned with their goals. So I love that. So Kyle, I really appreciate the summary. Welcome to the show, and let's dive in, man.
Let's do it. I'm ready to go.
So talk to us a little bit about, how did you get into this space? I mean, what was the catalyst that made you transition into multifamily specifically?
Yeah, so appreciate again you having me on. It was really for me a little bit different than I think a lot of other people, but I was looking for a career change. I had been investing in real estate since 2010, mainly single family homes, and I was just trying to build some passive income at that time while I worked at my full-time job, which I was a regional manager for a golf management company. And so my background was in hiring people, building systems, driving revenue, controlling expenses. And in 2015, I was burnt out at my job and I wanted to do something different. The golf industry was shrinking. My company was shrinking, so there was less opportunity for me to grow. And I struggled for 2 years trying to find something I was really passionate about and to find something that I really believed in. I really didn't want to get another W-2 job, but if I did, I would really want to be behind it 100%. So I looked at different things, even starting my own couple businesses, and nothing kind of clicked. And then in 2017, I stumbled across some coaching program and it said, buy apartments. And I thought in my head, no way can people just buy apartments, right? And this whole time it was just a mindset thing, come to know now. But I looked into it. I bought the course. I hired that person for one-on-one coaching for about 8 months. And 11 months after I found that, I quit my full-time job to pursue being a multifamily active investor full-time. So that's kind of how I found it, and just stumbled across it on the internet.
Beautiful, man. I really appreciate you sharing. So you said a couple of key things that really stood out to me. One of them being is at the time you were working full-time, the market was shrinking or your industry was shrinking. And then of course you started looking into opportunities. You saw this space or you started exploring this space as a potential opportunity for you, but you didn't think it was possible. Can you talk a little bit about that and what allowed you to make that mindset shift to then just go all in?
Yeah. So, I had been buying single family homes in the Midwest. And for me, that was a big mindset shift back in 2012, 2013, when I started buying a couple of them at a time. And then when you think about when you drive by apartments and you see these couple 100-unit apartment buildings, I mean, you automatically, I think, okay, that's someone that's rich or an investment hedge fund or whatever it is. And so it it really took me a while to really think to myself, is this really possible? And that's the reason why I bought the course, to be honest. I was just curious. And after going through it, it's the same as anything. It's building a network, building systems and processes, educating yourself, and, you can do anything if you take the leap forward. And so that process of educating myself gave me the confidence to be able to do it, and really networking and getting around other people that were already doing it. By going to meetups and things like that. I think that was a huge jump for me too, because I saw people with W-2 jobs getting involved in the space, and other people that were at my same level, or maybe even just below where I was in my professional career, that were buying apartment buildings. So seeing that proof of concept as well was a huge determining factor into eliminating my negative beliefs about it.
Sure. So let's talk a little bit about your first deal, right? One of the things that I love about this business is you do not have a shortage of stories. And usually during your very first purchase, and it doesn't matter what asset class, you learn an enormous amount because either your money is in the deal. And I always say, if you really want to learn something extraordinarily fast, put your money in it, right? And you're going to force to accelerate your learning. So in your case, can you walk us all through your first deal, what that looked like? Maybe some of the metrics?
Yeah, absolutely. So our first deal, we actually did not get until after I quit my full-time job. So a lot of people don't do that, in that order, and I don't always suggest it. But like I said, I was looking for a career change. But, several months before that, we had been building our investor list, building our meetup list, building our network, educating ourselves. And then when we got to the point where we felt confident enough in our investor database and our ability to manage a deal, we started going out to our market more often. And my wife and I used to, while we had our full-time jobs, drive to our markets, because it's just one state over, right? So it's Phoenix and Tucson. And we continued to do that even when I left my full-time job. So on one of those drives, we would leave at 2 a.m, get there at 9 a.m., and then tour properties all day, meet with investors, and then get back the next morning. And so on one of those trips, one of the brokers that I continuously called me and said, "Hey, I actually just got the keys to this property. Would you want to take a look at it?" And we happened to be touring properties in that area that day. So we moved some things around. Our property management company was there, and we immediately liked what we saw. We toured some comps as well. And essentially we had a 3-week head start until that property actually went to market, and we were able to get that locked up a week later. So, being in the right place at the right time really helped, but it was really doing things that others were not willing to do, which was driving 8-9 hours. Really, we were driving all day, right? For 24 hours almost,
Sure.
To go see deals. And we happened to be in the right place at the right time to be able to find this opportunity.
So what was one of the, biggest lessons or observations when you were touring all these properties? Because it's one thing to underwrite projects that you don't see, right, and make assumptions. It's something entirely different to actually tour properties and be able to walk the communities, right, and have a better feel for what that asset looks like, to then start proofing out some of your assumptions. Now, it sounds like a lot of these properties that you were touring, you didn't underwrite, right? You were just getting exposed to them and learning the market and also meeting people. But what were some of the key takeaways just from that trip?
Yeah, so a couple of things. Every time we went out there and toured properties, it really was, there was multiple reasons why we were doing it. Number one, to establish a relationship with the broker and to show him that we were serious, right? Because brokers get calls all the time about, "Hey, I'm a California investor. I'm looking for this, this, and this," and then never hear from them again. So we were showing our face there. We were also vetting out at that time property management companies. So we would tour with different property management companies to get to know them better, to understand how they worked, their business plans. And, that's what led to us eventually choosing the one that we did. But we were interviewing property management companies. And then as far as this specific property, the thing that we loved the most was it's a smaller property, motel style, 2 stories, and it wasn't advertised on the internet. So the only way you can get a hold of this property to lease it up were 2 ways. Number one, call the property management company that was managing at the time, and that property management company would have to mention that they have available units in this property because it wasn't being advertised online. The other way is to call the phone number on the sign, except the phone number on the sign was disconnected. And so I love telling this story because a lot of people, I don't think, call in and see, that type of thing. I just happened to say, let me call and just see. And it was disconnected. So I don't know how they were leasing up. And that's just a huge opportunity where you can just simply add some online marketing, add a phone number that gets to the property management company, and, increase your occupancy very quickly that way.
Sure. And so what made you choose Phoenix and Tucson? Now, what state are you in?
I'm in Southern California. Okay. And actually, when we first started, we did not choose that market. And first, it was Detroit and Columbus, Ohio were our two markets. And really, we're cash flow investors, so we look for properties that cash flow on day one. So at that point, we were looking for the highest cash flowing markets. And I don't always suggest that. I think it should be a cash flowing market, but it has to have some other metrics along with it. And I'm thankful that we ended up not buying in Detroit. And the reason why we went away from Columbus was the travel. It's 3 hours ahead time-wise. It takes 4 hours on a flight. And so by the time I'm out there, I've got to wait to the next day to tour properties and then fly all the way back. So travel is not very convenient, and I can't drive to Columbus, Ohio. The thing I love about Arizona is I could drive there if there's an emergency. I could be in Tucson in 8 hours. I can be in Phoenix in 5, and I can fly to both in an hour, hour and a half. So that is definitely not a determining factor, but it's definitely a benefit to choosing markets that are closer in proximity to you. So that's one of the reasons why we started looking to markets that are a little bit closer. And, we love what Phoenix and Tucson can provide as far as, rent growth, job diversity, population growth, all the metrics that you want to see in a good market. Arizona, Phoenix, and Tucson have. And so it made sense because of the proximity.
Awesome. So now we're in a very unique environment, right? COVID-19. And of course, the world is changing and probably will never go back to the same way we were operating prior, which I think is not a bad thing. But because of the changes that we're experiencing now, what are some of the economic trends that, you're seeing currently in the multifamily sector that you feel might create, an opportunity a couple months down the road?
Yeah, we're recording this right now, right at the end of July, beginning of August. And there's so much uncertainty right now, and I think that we're still 6 months away from being able to figure out what's going to happen to the multifamily industry. I think the next 6 months are really going to be telling. But I do think there's going to be opportunity because I think there's a lot of people who got into this space at the hottest time in the market and also that are not fully educated. And so I think there's going to be some pain here in the next 6 to 12 months with being able to survive, and cash flow off your property. So I do think that because the $600 of extra unemployment is falling off now, we're supposed to hear about another stimulus package, but there's only so many times you can kick the can down the road. Eventually it's got to catch up, and, jobs are being lost, and there's places that are not going to open ever again because of what's happened and now being shut down a second time. And depending on what state you're in, California is being shut down basically a second time now. So it's really difficult to say where the opportunities are going to be and when they're going to come because we're still in this third or fourth inning, in my opinion, of this whole COVID situation.
So with respect to asset management, I know you speak to that quite a bit, right? You speak to managing assets quite a bit. Talk a little bit about what you learned during this whole crisis and what innovations did this bring about, right? What innovations did this whole pandemic force you as an owner-operator to either evolve with or adjust with or change to be able to improve how your assets were performed? Yeah. Anytime there's a challenge, right? You either go down with it or you evolve and create an opportunity. And so we always look for the opportunity and challenge because I think, if you train yourself to recognize opportunity, you always will. Okay. Execution is a whole nother thing, but you first have to see it, right? So in your case with your properties, what did you learn? What did you learn from that experience, and how did you guys, adjust, and what were some of the greatest opportunities that you felt came from this?
Yeah, the first thing I really learned, which doesn't have to do with our properties, was that this community is a really tight community and they want to help one another, which I really absolutely loved. When this crisis first happened, there were so many people out there helping each other on what to do, how to handle the situation, and educate people on the steps to take. So I really love that. But really, it's, you learn just to be a better investor and a better operator, because I don't think that when everything's going well, you're not tightening the screws enough. You're not checking on your systems. And when COVID happened, certainly, the things are much easier to identify when things are not as streamlined as they should be. And so it was just about, making sure all of our systems now, especially online, are, front of mind for the clients. We couldn't do walk-in tours anymore. So everything was being done online. And when you log on to your website or your advertisements, does it have everything that the client or the potential resident is looking for to make their lives as easy as possible to be able to choose you as their, end destination? And I think some of the things on our end were not as tight as they probably should have been, because we were getting more traffic from walk-in or whatever it may have been. So it's really making sure that you dot all your I's and cross all your T's on all your systems across the board and have checks and balances. And then the other thing that we're really, doing now more than ever is communicating more with our investors and also communicating more with our residents. And that communication has gone a long way, and they appreciate that transparency in that communication, and helping the residents, whether it is finding additional assistance programs, helping them sign up for unemployment. Those things have gone a long way at our communities as well, and they really love it, and it reduces our turnover. So more of a kind of a personal touch.
Cool. So happy residents equals greater profitability.
Yes.
I love it, man. I love it. So hey, I'm going to pivot a little bit, okay? And I still want to stay on asset management, because I think it's a pretty important topic. What are some of the key things right now that you are focused on with respect to asset management, right? Especially as we move forward. So one of your comments was, hey, I don't think we are out of this crisis yet. I think things are going to get probably a little bit more opportunistic before long. So what are some of the key things that you're focused on right now to be able to take advantage of these opportunities as they emerge?
Yeah, asset management is all about building systems up front to be able to identify bottlenecks and issues in the future. And the more prepared you are on the front end, the more you can pivot and make decisions on your business that are going to benefit it. It's being proactive, not reactive. And so that's what we always focus on. We're not focused on what's happening today, because we focused on that 3 months ago. Obviously, you're going to look at KPIs and adjust, but we're trying to think 3, 6, 9 months in advance by implementing systems and processes that then you have checks and balances to, and can make a decision on the business. So whether that's evaluating certain KPIs now more than we did before on things like collections and upcoming leases and renewals per month and traffic per month and things like that. I think a lot of times people rely on their property management company to do the hard, heavy lifting for them. But a lot of these property management companies out there are not, they're a little archaic, and they're used to doing things in their certain way. And really what we're focused on right now is training and helping our property management companies improve their processes, which effectively, creates more efficient business and profitability on our apartments.
So let's talk a little bit about that, right? Give an example of that, because you bring up a good point. Real estate is a very unique opportunity, I think, especially when it comes to technology, because it's a lagging industry when it comes to technology, right? Especially property management. But then you said something that kind of caught my ear. On one side, you're seeking out property managers to manage your assets, but on the other side of that, you're training them. So at what point do you have to find a balance, right? Where you have property managers that actually have good technology, so you're not spending most of your time training and developing. Where is that balance? What does that look like for you?
Yeah, certainly there's that fine line, right, of over micromanaging to trusting your property management company. We spent 4 or 5 months vetting out all the property management companies and choosing the one that we wanted to partner with and go with. But no property management company is perfect, and I think it's making sure they understand that everything that you do is to help improve their processes, to actually make it easier for them to get the same result that we're both going after. So one great example is just on the leasing side, which is the hugest side, right? As long as your leasing is going well, you're probably sitting in a good position. And so we want to make sure that the person that we have behind the desk in the leasing agent position is, number one, trained in sales, because that really is a sales position, right? They're not managing the apartment, they're selling people on the community. So do we have the right person in there? And then how are they trained to manage and contact the potential residents, and what are our conversion rates on each? So if you have 50 leads, what's the conversion between leads to appointments? And then what's the conversion rate from appointments to showings, showings to applications, applications to leases? And by doing that, you can identify the bottleneck. If you're not tracking all those different things, you're just going to know that, hey, we have a problem in leasing. And then you're going to guess as to where you need to improve those processes. But if you know each of those line items and metrics, you can identify, okay, well, actually, we don't have enough leads for the leasing manager. Or, once they show up to the property, our closing ratio is way too low. We may have the wrong person in here. So there's things like that we do, and the way they communicate with the potential residents, how they reach out to them, the professionalism of the emails even. So we do what we call shopper reports, which is we audit on a monthly basis our leasing agents. So we'll create a fake email in Gmail and reach out on several different channels to track how quickly they respond back to us. Do they even respond back to us? Is the email professional? Does it have links to certain units? Things like that. And you find out really quickly if you have the right person in there or not. And then the other thing we do is we try and make sure that the most recent lead that comes in is the most recent lead that we reach out to, because leads go dry very quickly. So if it's been a couple hours, that lead may already be dead. But if one comes in 5 minutes ago, that one's still a live lead. So we try and have them do that one first and get to the other ones later.
So what do you think is the biggest value that you bring to your manager, right? Your property manager, because you talk about training them, developing them, overseeing or measuring results, right? Making sure you understand what those KPIs are, and then measuring results on a continuous basis, right? So what is the greatest value that you feel as a asset manager that you actually bring to the property management company?
If the property management company is willing to go along on this ride and work together with us, ultimately the value is that we'll make their jobs easier. Because once these systems are put into place, it streamlines things. And so they don't have to work as hard to find those leads. They don't have to work as hard to close those leads because we're building the systems up front. I mean, that's the whole thing about building companies, being an entrepreneur, being a real estate investor. Most of your work is done up front, putting the systems and processes and education together up front so that once it's happening, it's streamlined. It's just, I was talking to someone about sports the other day. You don't make adjustments really during the game. It's all about the practice that you put in beforehand, and the game is not the biggest factor, right? So it's the same thing with anything. And so if you put the processes in place up front and in advance, it's going to really make your job easier when you are putting in the work.
Okay, so let me kind of walk our audience through this. Okay, I'm gonna dissect this a little bit. Okay, so inside of property management, there's a cycle, right? So inside of apartment buildings, there's a cycle. We have, I'm gonna break this up into 4 quadrants, technically 5, but I'm gonna use 4. So we have acquisitions. We have to then capitalize the asset, usually with debt and equity. Then we manage it, which is the portion that you're talking about. Then at some point we have to dispose of the asset, right? So I'm gonna invite our audience into our conversation and kind of break that up a little bit so that they have some color to this, okay, that they understand a little bit better. So inside of asset management, okay, in this case, property management, okay, we have a couple different components. There's advertising, marketing, and then at that point, we have to qualify the lead or the tenant, right? Tenant screening. And then from there, we have leasing, okay? And then from there, usually it's maintenance and repairs. And then finally, right, at some point, we call the other component, you have to spot check your assets. right? You have to, of course, there are improvements, actually CapEx, but you have to monitor your assets, right? The physical condition of the asset to make sure that you're maintaining your standards. Otherwise, if you're not doing that, to your point, all that work deteriorates, right? So which of those components do you feel as an asset manager? Because if you're an asset manager and you have a property manager actually managing in place, to your point, I think it's a really good comment. You're either going to complement them or not, right? You're actually going to run into challenges because two separate businesses, usually two different philosophies, and oftentimes it takes another business quite some time to make an adjustment to someone else's way of doing business. Most companies just are not flexible enough in their way of thinking to be able to pivot. And usually it's a function of leadership, right? So where do you feel, you bring the greatest value to the manager inside of that spectrum? Is it advertising and marketing, right? Is it the training the leasing agent? Because technically that should be their job. Where is it process to manage the physical condition of the asset? So if you can elaborate on that, Kyle, it would be awesome, because our audience, it's easier for them to engage in a conversation where they can see the process actually evolve. And you have a lot of experience managing assets. So just talk a little bit about that. I think it'll be pretty insightful, right?
Yeah. So in my previous position, I was a regional manager. And so what that was is essentially the same thing that I'm doing now, right? Is being able to step back, take a look at the bigger picture and identify the bottlenecks, and then pick and choose the systems that we want to put in place to improve those processes. But really, I think where we've been able to get the best value is by being able to communicate in a way to our property management company that we are there to help. It's not shoving this system down their throat and saying you have to do it this way. It's really explaining to them in a way. And it really takes, I wasn't always good at this, but it always takes, you can explain the same thing in two different ways and you'll get two different results. And
man, that's such a great comment. Can you say that again? Because there's a nugget in there. There's a nugget in there. In fact, I want to put that in the show notes.
Sure. Yeah. There's two different ways. I can't remember what exactly it was, but if you say something in two different ways, you're going to get two different results, right? And it can be the exact same thing that you want out of it, but you've got to take the approach. And what we do well is take the time to think about how to approach this situation, right? So that we can explain it to a person that, it could be a property management company is always going to be a little bit defensive about how they manage the property. So how do you position it in a way so they know that you're helping them? And making it easier on them. And so it's not something that's very easily done, but it's something that needs to be thought about, because otherwise you're not going to get the result that you're looking for. You're dealing with people, and this is a people business, and the way you manage, train, and treat people is extremely important on the outcomes that are going to come out of it. So building the systems is not enough. It's really about the communication and the way you communicate it to whoever it is that you're talking to.
Yeah, you know what? I think that's a great comment, right? A good friend of mine told me a while back, and we were evolving in our business and going through challenges with people and staffing up, and there was just a lot of learning that I had to do as a leader. But a good friend of mine, and he runs some pretty good sized enterprises. His comment was, "Well, John, if you're communicating with someone and there's constant breakdown, have you ever thought about the fact that you're not communicating the message properly?"
Yeah, 100%.
And as soon as he said that, I paused and I started thinking about it, right? And he was right. The reality was, what was happening is I wasn't experienced enough at the time, or didn't have the skill set yet to be able to communicate my message clearly enough, right, to drive my outcomes. It wasn't the fault of my team. Actually, my operation manager, it was me. Okay, I wasn't communicating a clear enough message to my team and my staff for them to be able to execute properly. And so I learned a huge lesson from that. And now that's a really big priority in our business with everybody. So we use different mediums, right, to be able to communicate a message. But it's a really big deal. And so I love what you said, right? Oftentimes as entrepreneurs and as operators and leaders, we don't take enough time to look at ourselves, right, about how we're communicating a message. And usually the challenge starts there in our inability to communicate a proper message, right, or a clear message. So, man, I really love what you said. I think that's a golden nugget, truthfully.
I have another great example, and this is really more on training for technical things, but we use Loom, which is you can record videos on Loom, right? You can record your screen. So when we're training, like, let's just say a VA on how to do a certain task, I think a lot of times if you didn't do that and you just send an email on what you would like, you're not going to identify those issues. But when you do a video and you walk them through your process, a lot of times I've said to myself, oh man, I need to go back and redo this because there's a hole here. There's a gap here where this person in an email is not going to get it. And it started with the communication with me, right? So you really find the breakdowns in your processes, and it does start with you. So that Loom video has really helped me think about my processes a little bit more first and be able to create those processes a little bit better. And so I highly suggest doing that when you're training someone, is to video record how you do it first and walk them through, because you're going to be able to identify those things a lot quicker.
That's great advice. I love that. In fact, I think that's a golden nugget in and of itself. You know, one of the things that I've learned over the years, it's either how you're communicating the message, right? Your process is broken, or the desire to get the work done is not there. Okay. But it's usually messaging and process.
Yep.
If you have a really good process and you plug someone into the process and they want to work, they usually do a great job, right? Now, if the process is good and you plug someone in, you'll find out really quickly if that person wants to work or not. And usually at that point, you have to make some changes. So I really like that. I'm going to pivot a little bit now. Okay, and talk a little bit about acquisitions and capitalizing assets. I think your insights on asset management, extremely valuable. I really love that, especially the operational leadership component. So awesome. You know, we're coming into a unique, I think, opportunity in this market for those that are prepared, and to your point, that are working to position themselves for it. Okay, and I think it's going to be, I call it one of the greatest wealth transfers, if not the greatest, in the history of this country, literally, is taking shape right now, right? So in terms of acquisitions, how are you typically capitalizing your assets today? And how do you think you're going to need to capitalize them moving forward to still maximize return and, of course, minimize the risk, right, inside of that asset, and, of course, with, you know, your investor base, right? Because you can buy right, okay? You can. So a couple ways to maximize value, right? You buy right, you finance it properly, right? You put great financing on it, and of course you execute with management. So talk a little bit about that, because you're probably seeing the market shift a little bit as it relates to financing an asset, right? Debt and equity, and then you have probably your own way to underwrite an asset to find that right balance. Right? Not only for the property, but of course for returns for your limited partners. So can you talk a little bit about that, Kyle? I think that'll be a great.
So our business plan hasn't really changed too much except for the underwriting piece, right? So we follow 3 rules of thumb when we invest in real estate, and it's extremely conservative, but we can sleep at night when we do it this way. So that's why we do it. Number 1, the property needs a cash flow on day 1 with the new debt on it. You know, it may cash flow right now with the old debt, but does it cash flow with the new debt? We lock up longer term debt. So, you know, 7, 10, 12 years even on a 5-year hold to make sure that you can weather a downstorm. And then number 3, we never utilize cash flow to implement our business plan. We always raise the money up front so we have it in the bank so you can execute your business plan regardless of what the situation is. And then the other thing that we're doing now is just pivoting based on the market conditions on our underwriting. So let's just say we're in a market where we saw 3% rent growth that we were underwriting. Right now, we're not underwriting any rent growth. In fact, we even may see negative rent growth over the next 12 to 18 months. So it's just being able to pivot and see those things and peel back. We're not going to do a deal just to do a deal. We're going to do a deal that makes sense for our investors and for ourselves.
Okay. Really good comment. So I'm gonna peel something back a little bit. So you talked about not utilizing cash flow to execute your business plan. Can you elaborate on it, Knight? Are you saying, hey, look, we're not going to utilize our cash flow from operations to improve the property, right?
Correct. So today we're underwriting a property and we're going to put dollars in it, and that $1 million is interior renovations, some paint, curb appeal, landscaping, maybe some HVAC work. We will not plan for any of the cash flows of the property that it makes on a monthly basis to put back into those projects. We always raise those funds up front. And the reason why I say that is because what if COVID hit, in month 2 of your business plan? Well, I promise you that your cash flows today are not the same. They're definitely starting to dry up. The more and more people that aren't paying because of the eviction moratorium, now your cash flow is dried up. Now what can you do? You have to wait to execute your business plan. You just don't have the money to execute your business plan, and then your property just continues to fail. So we do not utilize the cash flow. The cash flow is for distributions. We raise the capital up front for all of our capital expenditures or renovations, whatever that is. And, you figure out all those things, obviously. Practice makes perfect, but during due diligence and working with your property management team to understand, okay, what is our business plan here? And then you have additional reserves on top of that. Right now, agency debt is requiring an additional 9 months of reserves. I like that actually, because it just gives you that extra buffer. Now, it's not easy to make those deals work now because you need a couple $100,000 in the bank. And there's a blend of that with, what your renovation plan is. So we don't raise all that up front. But as far as any type of capital improvement or business plan improvement, we're always going to raise those funds up front because you never know what's going to happen to your cash flow. It's unpredictable. So the one thing that you can predict is you can execute your business plan if you raise all that money up front and bring it to the table at closing.
So it makes it if you fully fund the project, we say we're going to fully fund this project, right? We're going to fully fund it. Acquisition costs, closing costs, and our CapEx budget, right? Including some of the other closing items that we have in there with the real estate purchase itself. So we're fully funding the project at purchase. And what you're saying is if you do that, then you build in less risk to the project, right? Because life, just like real estate, is not perfect. Things don't go always as planned. It's usually in the execution and how we make adjustments along the way. But when you have cash though, and all of that cash fully funded up front, it makes it easier to execute, right? Because the cash is available and you can just make adjustments more effectively. Is that kind of what I'm hearing?
Yeah, absolutely. I mean, what would you do if you utilize cash flow and then you ended up getting no cash flow? I mean, now you're really stuck in a position where you got to make difficult decisions. And not that we don't have to make difficult decisions, but it's a lot better when you have $1 million in the bank to make those decisions. So absolutely.
I agree. Love it, man. Love it. Really appreciate the insight. So now I'm going to pivot to what we call story time.
All right.
Story time, right? So this is the fun stuff. So in this business, everybody has a great story to share. This one is going to be about your most profitable deal. Okay, and then after your most profitable deal, we're going to talk about the least profitable one and some of the lessons learned. But talk to us a little bit. Tell a story. Tell one of your stories about your most profitable deal. What did that look like, right, from acquisition to closing, and why was it so profitable? What made that a great deal?
Yeah, so we haven't exited a multifamily, but we're in the process of exiting. But this one's definitely been the most profitable out of all of our investments. And it was just buying right and doing our due diligence and executing the business plan, but also relying on other people's help and opinions to pivot on the business plan. For this one in particular, we thought stabilization would take about 14, 15 months. It was fully stabilized in 5. We had pushed the rents 2 or 3 times and still getting it 100% occupied. We actually called in the broker who sold it to us because one of our things is we're always going to sell the property with the broker we bought it from to continue to establish those relationships. And we said, what do you think? And he said, you should implement a premium unit. And so we looked at the numbers, made sense. We implemented a premium unit, and it only cost us $1,000 to get that premium from regular to premium, and we're getting $90 extra in rent a month. So the ROI on that was ridiculous, and that positioned ourselves to now sell, and it's under contract now, knock on wood. We're getting the same price that we wanted in month 15 that we had planned in year 6.
Okay, beautiful.
And it was really being able to adjust the business plan. Everyone, I think, when you're running a business or an apartment, the business plan is a live, living, breathing thing. It's never set in stone. You've got to be willing to adjust and massage it and go with the flow of it. And by doing that, we were able to get more velocity out of our investors' money.
So talk a little bit about the premium unit. What does that mean? Can you clarify that a little bit?
Yeah, sure. I think there's different levels of premium that you have in your mind or people have in their plans and depending on the market and things like that. But our premium unit was upgraded appliance packages. So instead of black or white appliances, we went to stainless steel and we added a glass backsplash in the kitchen and an accent wall and upgraded lighting. And then the other thing was handles on the cabinet. So on the regular units, there's no handles or pulls on the cabinets, and so it's just slightly upgrading the property, or the unit, so it just looks more premium and upgraded.
And what percentage of the units did you actually upgrade like that? What percent?
Yeah, so this was a smaller property, 42 units, and we ended up doing 5. And that was at the suggestion of, talking to our property management company to position it for sale and also the broker. So, you always want to talk to the broker about what's going on in the market and how to best position a property for sale. If you're at that point, don't just rely on your business plan. Also get the opinion of others who are going to be really the ones responsible for selling the property.
Awesome, man. Awesome. So what was the biggest lesson learned from that, that profitable experience?
For me, since it's our first property, that we can do this, the whole mindset of buying an apartment and executing a syndication, it's a huge undertaking. And I think it takes the right mindset. And so executing on that plan and seeing it kind of go full fruition has been amazing.
Awesome, man. Awesome. And talk a little bit about, maybe an experience that you had that didn't turn out the best.
Yep.
And the greatest lesson there, because in this business, you don't have a shortage of, I call them expensive seminars, right?
Yep.
and I've had some really expensive ones. I've had some multi-million-dollar seminars, but the learnings from that though have been, probably in multiples of that, right? 5 to in some cases 10 times. So talk a little bit about just some of the challenges that you've run into this industry or in this business, especially as you were pursuing your first deal, right? Or maybe now as you're managing multiple assets, right? You have a $70 million portfolio. So what have been some of the challenges that you've had to overcome and just the greatest lessons there, the biggest takeaway?
Yeah, mine is with my single family portfolio. When I first started investing in real estate, it was in Southern California, and I learned the landlord tenant laws out here are not favorable. So that's when I took my money and started investing in more landlord friendly states. And some of those states were not producing the cash flow that I really wanted. And so I forgot my one rule, which is, my 2 rules. Don't just look for cash flow and invest in landlord-friendly states. That was a huge thing for me. And so my first investment out of state was in Arkansas because it's one of the most landlord-friendly states out there. And then I started getting dollar signs in my eyes and chasing cash flow and not thinking about my other rules. And so I started buying single-family homes in Chicago because the cash flow was 4 times the amount I was getting in Arkansas, right? But I didn't even look to see if it was a landlord-friendly state, which it's not, and the taxes have doubled. And so on paper, things look great. But really, when things get laid out in the real world, it doesn't always work exactly how you have it, right?
Sure.
My biggest mistake was I didn't follow my rule of making sure it was a landlord-friendly state. I still have some of those homes, and they're a little upside down. And so I've just got to do my best to break even on them at this point, but have lost more money than I thought I would on those. And, in my mind, when I bought them, I was going to be making massive cash flow. So,
right.
Stick to your criteria and don't just chase cash flow. Make sure it checks all the boxes.
Sure. Well, I really appreciate that. Well, Kyle, you've been a gracious host. I think it was a great show, great feedback, especially around asset management. So I'm going to summarize this really quickly for our audience. So inside of multifamily investing, one of the most important components is asset management, right? Because when you're communicating with your property management company, there has to be leadership involved to set standards. And in your case, right, you're managing to standards. And in order to do that very effectively, you have to be able to, number one, communicate a great message. right? And it usually starts with us as leaders, because if we're not communicating a message properly, then there's usually going to be breakdown, right? And so I want to thank you for being on the show. I think you've been a tremendous guest. Great insights, especially around leadership and managing managers, I like to say. And man, hopefully we can have you back, and look forward to having another discussion as you continue to expand.
Yeah, John, thanks for having me on. I really enjoyed it.
And now, how do people get a hold of you, Kyle, if they want to reach out to you?
Yeah, the best way is right now we're doing the Virtual Asset Management Summit. We're really passionate about this summit. It's completely free, and I think there's a huge gap right now with people educating others on how to get started, how to raise capital, how to do your first deal, but no one's being taught on, hey, what do you do after you close on the deal? How do you run this business? How do you manage and operate it? And so it's amsummit2020.com. It's a 14-day free event with some of the industry's best speakers and best multifamily investors, and we're going to talk about the best practices of operations and management, which is not something that's often talked about. And we're going to dig into the details, and we're really excited. So that's the best way. Or you can go to our website, aptcapitalgroup.com. We've got a free passive investors guide out there that talks about the things you should know before you do get into your first investment.
Awesome, man. Awesome. Well, we really appreciate being on the show. Great commentary, great feedback. And I wish you continued success, and especially at the Virtual Asset Summit.
Awesome. Thanks, John.
Thank you, bud. Appreciate it. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.